Hello everyone, this is Sahura. I will be with you to review the central banks meetings in Europe and also Turkey, and then we're going to check the U.S. inflation and labor market data, and finally we will review the market reactions and we'll talk about how the market can react next days and what's our expectations. Going forward, first of all, let's check with the Central Bank of European Central Bank, the Central Bank of Europe, your European Central Bank, ECB, whatever you say. With no surprise, we passed the central bank's meeting in Europe as expected. They held the interest rates at 2%. The only changes that we had, it was in economic growth expectations. Now the European Central Banks expect that that European economy to increase by 1.2% in 2025 against the 0.9% expectations that they had previously. Generally for inflation, they almost didn't change the percentage is almost as similar as the projections that they had in June. I mean, like for 2025, and they are expecting the inflation of 2.1%. For 2026, they expect a 1.7% and 1.9% expectations of inflation expectations for 2020. So generally, the market is just like they're continuing the same expectation, and the market didn't get any surprise from European Central Bank with no change in the policies as well. The other central bank that we had a meeting today was a Turkish central bank, where they cut the rates more than expected from 43% to 40.5%, which means a little bit more than 41% expectations. That means that the Turkish central banks already started to continue the rate cut to support the economic growth. We know that the economy with the interest rates around 45 and 50% for a long time, somehow they just blocked the economic growth here, limited the economic growth for so many companies that just like the companies and the people, it's getting so hard to pay the debts at the current situation with this percentage. So that's why the central bank decided to cut the rates, cut the interest rate and make it slightly lower, which means the economic expectations can be slightly better with that, while we have much more cheaper money in the market that can support. But at the same time, we should wait and see how will be the inflation reaction in the next months with the lower interest rates. Continuing with the U.S. data, we had the labor market data at the beginning. We can say that the initial jobless claims had a surprise with 263,000 apply for to use the unemployment benefits. That means that the labor market, as we were talking in several weeks and several months, that the U.S. labor market has the sign of the cooling. But at the same time, we have the continuing jobless claims by 1,939,000 in line with the previous week, and generally lowered from the initial expectations, which means that the labor market, while cooling, but it is still fine. As we can see, the 4-week average still is lower than 250,000, and we have the 4-week average only 240,000. That again means that the labor market, unlike slowing growth, unlike weakening in a previous months, still it is fine. Still it's good. I mean, still it's acceptable. We shouldn't be too much worried about that, but we should be clear about that. There are two different things. We shouldn't be worried, but we should be clear. The same reaction we should have for the U.S. inflation data. While the inflation for core and headline inflation was expecting to increase by 0.3% monthly. For the core inflation, we met the expectations, and the core inflation increased by 0.3% monthly and 3.1% annually. But for the headline inflation, where we were expecting to see 0.3% inflation growth, the inflation increased by 0.4%, as you can see here. And on the annual scale, the headline inflation is up to 2.9% now from previous 2.7%. And when we see that like a CPI index, non-seasonal adjusted, is increased slightly to 324. and adjusted also, same, the CPI index for adjusted and non-adjusted, both of them, they increased compared with the previous month, which means now inflation should not be concerned. We shouldn't be worried too much about the inflation, but we should care about that as inflation is slowing. Yes, just like in overall trend, yeah, this one slightly increased. Overall trend, the inflation is slowing, but underlying concerns still continuing showing themselves in the market, which means that while we are still just like happy about the somehow the slowing inflation, but at the same time we should be care about the underlying concerns, which should be watched more carefully. If we do not take care about them, they may increase in the next months and they can create the concerns. So for now, none of them, not inflation data and not labor market data, both, I mean, none of them shouldn't be create the concerns, but they should create a awareness. They should create a carefully like looking in a market. That's what we can understand from the data. And now let's go to the chart and see with these data what we can expect from the chart and from the market movements. Let's start shortly with the Turkish lira and the Turkish Central Bank. The Turkish lira is getting slightly, again, continuing its weakness. Now it's trading for each dollar. We have 41.3 Turkish lira, which means that the Turkish lira is still continuing its overall uptrend against US dollar and getting weaker. Now still market counting on 46 Turkish lira for each dollar, and expectations is continuing. The lira is continuing to get weaker. But maybe stock market can take some advantage of this lower interest rate. Going back to the Europe, as you can see here, while the European Central Bank held in the current interest rate at 2%, at the same time, they increased their economic growth expectations from 0.9% to 1.2% for 2025. That support the euro against dollar and other rubles to make it slightly more powerful. Now we can see that the euro is still getting slightly stronger against the euro is getting slightly stronger against the dollar and improving. So which can be somehow the good news for I mean it can be somehow the good news for euro, but on the stock market it cannot be too much welcomed by the European stock markets. So the euro can still, I mean, when we are looking at the euro USD chart, we can expect our overall uptrend, but for the euro stocks, side movement with the slightly downtrend will be more welcome. On the dollar index, after US data, we can say these data, they cannot be in favor of the dollar, so that cannot support the dollar index to increase further. But at the same time, we have awareness there. Not too much concerns, but we have awareness there. And this awareness can support the idea of being more cautious. What does it mean? It means that the euro can hold its current conditions, can hold its current rate, the dollar index can hold its current condition under 98, but I mean, it's like we cannot expect that the dollar index to fall further. Don't forget that the dollar index year ago it was 114, 110, and now it's under 98. So the dollar index already down, is already eased. So these levels could be somehow the acceptable level with these data that we had. So these data cannot support the dollar index, but they are not too much weak also, or inflation was not too much low also to say that, okay, that can put the more pressure on the dollar index and dollar can go down further. As the dollar index slightly weaker, gold slightly gained after these data, but generally, as mentioned, these data can still hold the awareness and slight concerns there, which means that after new all-time high, gold now can take some risk. Technically, probably we're going to have some correction here. The market was expecting for 3,600 US dollar for each ounce in many years. It's like at the beginning of the year from many banks. That's why probably we can have some profit taking here. That can be the maximum idea of increasing the price by too many mind. I mean, by the mind of, I mean, just like in the mindset of too many traders and investors. That's why the technical correction is not out of the mind for these levels. At the same time, if you look at the stock markets, these data, yeah, they can support the interest rate cuts. They can support the idea of the inflation is while cooling generally, so they can support the stock market's growth. There is no exact sign for that, but with these data that we have in the market, with the awareness that we have, with the slightly slower growth economy, when we are looking at the economic data, we can see that the real income is getting, the real income, don't forget the US real income fell by 0.1% for the first time since 2024, which means that the market, the people, or the average income also slightly increased. It's like increasing varies more slightly comparing with the previous months and the previous year. That means that the people's income and the spending can be weaker as the credits also increased. The consumer credits. All these data says that we should be more very cautious about stock market's uptrend continuing in the next months. So we can say that these data, all the data together, the market condition also turning on this warns, this alarms that be careful, that's the level that you should be careful about that. Same thing for S&P 500, for same thing for the Nasdaq and the Dow Jones as well. But again, as mentioned, there is still no clear sign for this being the cautious, but still we should be the cautious about the levels. These levels, they are so critical levels, man. You may lose, you may lose some of your just like profits here. So be careful about the trends and the markets. As for the cryptocurrency, these data cannot directly affect the cryptocurrency market, but at the same time, the crypto market moving mostly in line with the US stock markets these days. So technically, for Bitcoin, there was an uptrend as long as especially is trading around above 109K. But these data, if they put the pressure on the stock markets, they may put the pressure on the Bitcoin and other cryptocurrencies as well. But generally, as mentioned, again, we have no clear sign that these data can directly affect the Bitcoin and cryptocurrency market. Okay, yeah, that was generally the data and our expectation from the market reaction and our expectation. Hope it was useful for you. If you had any other question, don't forget to write in the comment section, me or our